Hey everyone, doing a sound check. About 2 minutes, folks. Welcome everyone to the Kendall Report. It is 9 p.m. I'm Bob Kendall. Got a fair amount to talk about tonight. I talked about yesterday's close being pretty bad. Well, today was even worse, right? We saw a lot of late selling come in again and nobody wanting to hold or be the bag man up here. And it's interesting because everything's somewhat predicated on this infrastructure deal. And I don't think it's going to happen. I'm not sure what they're going to get through. And it's interesting that even that market participants think this is a good thing for the markets. Uh, from my viewpoint, it's just going to bring in more inflation, more of what we already have. And, the issues that lay out there, nothing's changed, by the way. And if anything, things are getting worse. I'm not sure it was right, but now I heard there's 110 ships around Long Beach and LA. I'm not sure if that number's right. Heard somebody mention it in passing, and this is it's just crazy. And as I've said before, this whole situation that we're dealing with is really being driven by lack of truck drivers and trains and all the people to move this stuff. And once it got backed up, there's no way to get out. And I mentioned this last night, just by stacking containers 4 high instead of 2 high doesn't change anything. They're still not out in the marketplace where they need to be. So it's going to get more interesting. And the reason why I bring this up is that we are going to get the first glimpse at Q3 GDP in the morning. And the estimates are expected between 2.7 and 3.2. We just go back last quarter, it was 6.7. Go back before that, it was 12. And I understand that we were coming out of this hole. But all of a sudden, it looks more and more like we're going back to the old 2.1 Obama-Biden days of the past. And the difference is this time is we've got this massive inflation. We talk about this 5.5% inflation, but just about everywhere you go, food and other critical items are up probably more than 10%, maybe 15% in some places. And I know somebody on the channel remarked a couple of nights ago when I was talking about shipping that you can get some things faster if you're willing to pay for it, right? So it's it's a whole thing. If we can expedite that for you for 20% more if you really need it. It's the same thing with Amazon's been doing that forever, right, on their shipping prices, depending on how fast you want it. And I get it. That's how things work. But this GDP number that is expected, that's slowing down. And I've been telling you that I think the markets are going to hit a wall, or the economy is going to hit a wall. And I think this is the beginnings that was already happening a bit, just because more normalization more than anything at the moment. But going forward, these supply chains being disrupted, all the things that I just mentioned without going into tons of stuff I could go into, they're definitely looking at this whole situation starting just to hit that wall I've been talking about. And it's just going, like I said, I think we could see sub 2% in Q4, maybe closer to 2.1 or lower. This is Q3 numbers, which was part of the summer recovery that we were talking about, right? These numbers should be much better than what we're talking about here. And so if that's what you get then, wait till we get into the winter months, wait till we see what's going to happen with energy prices. Of course, everybody's predicting the cost of heating and you name it across the board, no matter whether it's nat gas or propane or gasoline or crude oil is going to be higher. Maybe that's the case. There certainly is a consensus out there, but these things are just going to cause even more problems, because let's face it, especially energy costs and heating, that's something you can't go without. You got to go to work, you got to stay warm, and a lot of the planet is going to be in winter. And you can say I've already got my winter gear on here up in northern Arizona, so it's starting to cool down, and this is just going to affect output. People won't have money to spend; they're spending on all these other things. You folks all know this. I know that. I'm kind of preaching to the choir a bit here, but I really think this Q4 is going to get really scary, and we'll, as we just go on and talk about a little bit about what happened yesterday. I thought it was interesting because we saw and I'll go through all the details here in a minute. We saw the 10-year drop pretty good down into that range that I've been talking about it declining into. S&P ended up down 0.5. It was kind of flattish all day and then just sold off at the end. NASDAQ completely flat, like 0.0, and the Russell down 1.9. So all of a sudden, these small cap stocks got absolute whacked. When I show you what happened to our database tonight, that's even more interesting. So we're definitely seeing some rotation. I'm going to go through the details and the technicals in a few minutes, but if you recall, I've been talking about this rolling of the market grid starting to flatten out and starting to show some weakness to the downside, and that's starting to show a little bit more. I still don't expect any major collapse, but we're definitely seeing this flattening out of just about everything. So let's go ahead and dig into the numbers on the WaveTech output here. Let me make sure I've got it up here. Let's get there. And so this is, let me zoom in on this number. So here we go. We're at 48.2. We are now 43.32. Magic number, 42%. So we're right back into that. We actually had 1,823 sell signals, 254 buys. If you recall the other day when I was discussing the database, I said, we're just not getting the traction. We're making these all-time new highs. We're just not getting that traction. We got up, just at 50%. And typically you'll get to about 62, 68. Doesn't go to 100. Highest I think I've seen it over the last 15 years was back in 2009, where it got up to 90. I think it was 96.5%. So just about everything was long coming off of that low. It was not quite as, as strong last year on the 2020. There was a lot of rotation. There were still a lot of industry groups that were blowing up, so we didn't get a lot of those trends to explode like we did in mid-09. But here we are, like I said, back to 43. Today's going to be an interesting day. Today meaning Thursday's action. That's going to be an interesting day to watch and just see if we can get any type of stability here. The futures are up a little bit. Go through the details here in a minute. But the overall situation that's happening with the database is it's just everything's hanging on really on the edge here. So we have the intermediate trades hanging on at 42 and change. Let me just bring that up real quick here. I'll zoom in on it so you can see this. So this is the intermediate percent bullish, 42.37. So it's right there at this number. As we come into Friday, if we finish lower this week, is it getting sensitive to more liquidation? I think it is. We're down to only 5 of the sectors long now. But if we look at these sectors here, let me bring this up just so you can see this just a little better. If we look at the sectors here, we're capital goods, energy, financial services, and utilities. Those are the long positions we have on a sector level. And if you look at these, capital goods, 225 days of 211. And typically, this signal lasts for 211 days. We're starting to exceed it. We're almost there on energy. Energy's up 51% on a sector level. And I know for a while I've been telling you folks this is the play on energy, and it has been just that. Financials up 31% on a sector long 220 days. Now, financials have a cycle of 342 days. And on the services up 20, but it's exceeding its normal holding. Utilities up 18. It's coming very close to its normal holding period. And what that tells us is that the last few sectors that are long, this last 42% of the symbols that are still showing trends are getting very vulnerable to completing this cycle. So it's interesting. It seems to always happen this way, or I'd say most of the time it happens this way, is that as we get into these all-time high syndromes, the market breadth narrows down, and it gets very narrow. And I've mentioned this before. I always remember as we came into the 2007 highs, which was November, that was the high before the '08 crash and going into the '09 lows. There were only, the best I could estimate at the time, about 37 stocks that printed up enough to get the indexes to print up to those all-time highs in 2007. And what we're seeing here is a very narrow market, and this continues to be the case. So I'm going to go over to the home page here for a second. And we have this metric on this page here. Let me bring this up so you can see it. And I did a pretty in-depth dive on this a little bit, I don't know, probably about a week ago or so. I remember going through this. But the database peaked out early in 2021, and we get less and less participation here. And what we're seeing from this standpoint is we're seeing a little bit of what I call an echo bounce here. We were able to get up, and now we're coming back down to this 42% level, and it's possible that we're going to get into even more of a narrow market. Now, the fact that that's happening doesn't mean that the world's going to end and everything's going to happen. But of those of you that use WaveTech or Portfolio Expert, more than likely you have probably anywhere minimum of 40% cash and maybe as much as 60 in your portfolios right now. So a lot of the portfolios, this database situation kind of goes across the board. So let's say you have 25 stocks in a portfolio and we're at 42%, you're probably going to have 10, 12, maybe 14 stocks long, and based on the allocation factor that might be on those portfolios, what you're going to see then is somewhere in that range, somewhere between 40 and 60% in cash. And why is that? Because we're in a defensive mode. Even though the markets are printing up at an all-time high, the models are defensive here, okay? And like I said, this is really just a reflection of the narrowing of the breadth of the markets from a trend viewpoint, from a WaveTech viewpoint, and all of the models. And we're running these on 16,000 symbols. Well, there's not 16,000 stocks, probably about 6,800. There's mutual funds and ETFs included in those numbers, and also includes the bond funds, which a lot of them have been flat for a little bit with the rising yields. But the point is that this market is starting to show narrowing signs as we get up here. We almost printed that 4607 number that I talked about the other day. So let's dig into the technicals here so we can look at these indexes and start to see exactly what's going on here. Now the futures here on the S&P is up 7 handles right now. They were up a bit more, almost 10. So this is the rolling that I'm talking about here. Let me draw a couple things in here. Before I go into that, look at the PPMs. PPM 1 crossing through its first derivative. PPM 2 flattening out. PPM 3 no acceleration there. So what's setting up, and I talked about this a couple days ago, if you'll recall, I talked about this 10-period moving average coming into the pattern. Well, yesterday 45.15, today 45.27. The low overnight so far is 48. And at that rate of change here, let's see what that is. That's about 12 handles. So tomorrow it's going to be, Friday, it will be right at 45. We're going to call it maybe 37 to 40, right? So now all of a sudden, this key support number is going to be right there where it could be broken. And if it breaks, we're going to, also talked about this, we're getting the crossover of the 21 over the 40. And as I've been telling you, when that happens, it's somewhat of a positive cross, but typically what happens is the markets tend to go into a minor correction when that happens, and it will correct back into the 21-day moving average. That number right now is rising 10 handles per day. It's 44.35. So in 4 or 5 days, you can add roughly 50 handles to this. Now this is the futures. Let's go over to the cash S&P just so we can take a look at SPX. You know what? Before I go there, I forgot to go through the projections for today. Projections, and let's review yesterday's projection. I thought we were going to be able to maybe print an R2 yesterday. We got R1. 74 was R1. 76 was the print high. So we just exceeded R1. It got rejected from there and went almost down to an S3. We had a 43 low. S2 was 45.37. So we traded down below S2 and almost to S3. So this is exactly the kind of sideways rolling pattern that we're getting here. So like I said, that number 40 right now is 45.27, rising like 12 handles per day. That's going to throw us at 39 roughly tomorrow. So we're coming into a critical point here, and we're also coming into, you know, some of these other numbers. And I realize I really didn't talk about the claims numbers, and so I'm going to come back on screen and just kind of blend that in with the commentary on the S&P here. But you know, we have continuing claims coming out tomorrow, expected to be 280,000. If that number comes in a bit higher than that, maybe this will start to indicate that the economy starting to hit the wall. And the other number is the continuing claims, 2.48. That number is dropping because people are stopping looking for jobs again. So it's not necessarily a positive number, and it did drop below my 2.5 million number, but that comes out tomorrow. Not sure that's going to be material as much as the GDP that I discussed earlier. I think that number is going to have more impact, and at least more emotional impact on market sentiment. So let's go to the SPX now. I thought the close that we had on the SPX was interesting, down 23 handles on the close, 23.11, down 0.5%. But here we are coming right into that moving average. We also are seeing the market grid turn down. So we went from that rounding pattern that I've been talking about to turning down. Now, this is not necessarily any kind of disaster. If anything, we're going to sit back and maybe move back under toward 4,500. I've been talking about that number is going to be pretty significant possibility of maybe getting down to 44.80. Let's do a quick, just for fun, let's do a quick Fibonacci retracement value. So let's just see what that would be just from this last low here. Yeah, so we're looking at 45.15 is a 33%, 0.3 at 245.01, and 50% would put us back to 69. I don't think we get there, but we could easily see this 45.15, 45.01 number hit. So we'll be watching those numbers, and that most likely will coincide with this 21 period moving average that's going to rise into the pattern, and that should hold the market. The absolute extreme, which I don't see it in play at all, is the 44.50 number, 44.45. I just don't see that in play. PPMs have enough upward support right now with PPM1 on this at 0.41. So there's really a 40% probability to penetrate that number, a 60% probability to stay above this 40, right now 45.05. So, and that's moving up about 12 handles. So I see this thing still holding. If we get a more of a backtracking here around the low of 45.50 level. So let's go to NASDAQ. They're having fun again tonight, up 28 handles. That was a crazy move that was going on in the NASDAQ last night. On Wednesday's session, and primarily what we were seeing here is the reaction to the lower rates, which I'll talk about when I get through the indices here. And those lower rates are bullish for the tech stocks. That's the perception of it. And we saw a really nice move. We look back at yesterday's numbers here. 15,717. I actually said that we could print on this thing up around 15,707, which was R3 yesterday. We got even above it. Downside never came close to S1. I didn't think we were going to see that, and that's what happened. We look at today's numbers. We're now looking at R1 is 639, so we've already printed R1. So look for at least R2 and the potential to get up to R3. The relative strength here is still very good in the S&P, and especially when we go through the Russell here in a minute and look at the spread, you'll see it got hit pretty good yesterday. But this doing the same pattern though. We're getting the crossover of the first derivative on PPM1 plus 0.38. We're seeing the flattening a bit of the PPM2 and then PPM3 not accelerating. So it's all the indices are in the same pattern. And all, like I said, this 10-period moving average, 14,426 is going to be an extreme. That would be S3. Don't even see that in play. Up 30 handles. Look for probably that R2, R3 number on the upside for tomorrow. Let's go to Russell Cash. This thing just got hammered. This is the daily. We traded right back. The number I've been talking about is 2250, 2255, low 2252, close 2252. It closed on the low of the session on the cash. Overnight on the futures, we're seeing it up about 0.25, back at 2255 right now on the RTY. So we're seeing something really interesting here, though, which is, I don't know, we'll just call it disappointing, just for the aspect of whether that we're going to get enough traction to move the markets sharply higher, because I still believe we need the leadership to change back to the small cap to really get things going. Not happening at the moment. We're just holding support levels. And you look at the PPMs, we've crossed first, second derivative. PPM2 crossed the first derivative. Won't take much downside to get it to turn down. And then the PPM3 is through its first and second derivative. Let me put the futures up. I just want to see what that calc looks like. Yeah, so still holding on the PPM2 on the futures, so that's an interesting pattern. Let's go and take a look at the spreads here. And as I said, the spread, this is the NASDAQ. We're almost down. I talked about that range last night. We're right down to support levels in the spread. It's going to be important for this thing to start to flip up. We look at the futures action right now overnight. We're not really seeing that type of flip on everything. They're just kind of stable, as I was just showing you. We've got the RTX up 0.25 and the futures on the NASDAQ up 0.17. So a little gain, but nothing material. But I'm still expecting to see this thing actually, stabilize. As long as we stay of 2250, that's the number. The one thing that did happen, and I mentioned in last night's video, we printed up to that 2321. Let me show you that objective here. 2326 was that target that I was talking about a couple of weeks ago being hit when these dots up here, when this calculation came in. That's exactly what that has satisfied that. But in the big scheme of things, when we look at it, all the Russell has done is traded back into the upper band of this range that's happening. I bet you if I put a just the medium range for this period is probably right at 20, probably 22.30, 22.40. If I put something up like that, you'd see exactly that. And this is a pretty big range. People are nervous about this market, and especially when you see interest rates go down. So let's go to just come up, and we'll call this mid session here. Couple things I want to cover. I'm going to go through the typical cycle as we always do. I'm going to go through the 10-year, the interest rates. We're going to look at the yield curve a bit because there's something going on there that is, I think, interesting. And we had a auction of 5-year securities, and there's another auction of 7 years maturities tomorrow. And it went really well. Everybody wants this stuff, and a lot of this has to do with what's going on still in Europe. The bids, there's a reason to own U.S. securities yet. And the thing that I want to bring up before I go into the charts here, let me bring up the 10-year while we're talking about this. We go into the charts here, is that a lot of this little backing up is going to what I was talking about on the opening comments. It has to do with the economy potentially slowing down. If that happens, maybe the higher yields for the moment, I'll show you how that's set up, will at least go into a sideways consolidation. And I mentioned, I think, I'll get the numbers here in a minute, but I think as low as 1.48, 1.44 is probably the bottom, but we'll go through the numbers here and just look at what's going on with the chart. What's happening here is you can see we crashed through the 21 period moving average. We'll look at the PPMs here. Look at this sharp loss in momentum. This thing was screaming, just going in probably 10 days ago as we were printing it back into this. What was the high here? Let me get the right numbers up here. 169 print. Thought we'd go sideways, we'd come through here. Well, we've gotten through the 21 period moving average, but look at the PPMs here. This is the whole story being told. They started rolling over. We never got the acceleration on PPM 1. PPM 2 was holding some decent numbers. Now it's negative, and PPM 3 is the only thing holding, and that is the 1.46 number. I knew it was around that number. And we'll go to the weekly chart so you can see this just a little bit more. You're looking at right now the extreme for the weekly market grid. We've got 2 more sessions to go. 152.9, the low was 152. We actually got through the STX number and we closed right on it. 152.9 is the STX extreme for this week. But the PPMs are still bullish here. We're looking at the 10 period moving average at 1.46, goes right in line with what I was just talking about on the daily. So that's going to be most likely your extreme. 1.48, 1.46 should be the bottom. It's interesting what's going on with these PPMs. So this is going to be one of those stages where all of a sudden we could go right back into the weekly averages. The as far as I can see right now, it looks like around 1.41, 1.42 would be the extreme. That's another 10 basis points on the downside. So that looks like where we're set here. Let's take a look at the yield curve. And there's a couple things here that I want to show you. And primarily is this, the 530 spread. It's interesting. This is flattening, and I talked to you a bit about this last night, where we're seeing the 2s, the 5s, the 13-week T-bills. All of these things are starting to print up, so that bottom end or the short end of the curve is actually going up while the long end is staying fairly flat, okay? This is the 530 spread. Let's take a look at the 1030s, and you're seeing the same flattening, which is even more interesting. The reward for owning a 30-year versus a 10 is only 43 basis points right now. That's not much of a reward to hang on to a security or have a 30-year maturity. So the yield curve is really starting to act very strange. I think that the Fed is going to be challenged by all this. I've talked to you, I actually thought they would want to see more of a steepener in here to keep rates down. With these short rates bumping up, there's still the consensus out there. If you look at the Fed funds futures and just look what the 2-year and the 13 weeks telling you, it's really telling you that, you know, the Fed's probably not going to raise rates. But if let me go back on this screen here. We take a look at, let's take a look at those shorter rates again. We just look at the fives. You'll see this thing, it printed down a little bit, but we're a much steeper rise. We've got really strong PPMs up 3.79, 1.96, 2.19. So that angle of attack is huge. There is some potential downside to around maybe about 1.05 on this if we continue what we saw yesterday. And a lot of this may be predicated on the fact that we're going to maybe get a worse GDP number than expected tomorrow. And especially going forward when we look back on the next revision to Q3. But I can't wait till we get into Q4 results, because that's going to be, I think, the scary part that I've been talking about for a number of months. So let's do one more look on this. Let's look at these 13-week. I have to go off of this and go to a daily time frame so you can see this. But you can see it's still right at the same 0.50. I'm marking 0.65 on this. If it gets above that level, that's going to start to change. I think the Fed being more aggressive about the taper, and they're going to want to have some good metrics on the taper numbers. When they start to taper and they take some of this stuff away, they're going to be watching this really close. So, I said, if it gets over certain numbers, 0.65, that's going to press them maybe to think about some things in December, even get more aggressive with taper and, the whole liftoff, right, where they're going to start raising the short end rates. That's probably still off a little bit, but I think if this gets out of hand at all, we could see this go pretty strongly. And the scary part is if the 13-week we see the 5 and the 13-week stay stable and the 5-year starts to come down, that would be the spread over here. Going to go back to the yield curve here for a second. And what I want to show you is this other chart. Then we'll move on but this is the one that's happening. So this has been flattening. It's started to steepen a little bit today. So that means that with the 5-year coming down and the 13-week actually staying stable is what I'm talking about here. So all we have to do is stay a little bit here, and this spread gets down. Right now it's pretty. It's going to continue to steepen here. I think back to maybe 0.80, something like that. We'll see if it gets even narrower than that. But I think we're going to see. This is what I'm watching. I mentioned this last night. Okay, so enough of the Fed and interest rates. Let's get on here and So we're going to go through crude oil here. Crude oil starting to come off. We did see penetration of the 10 period moving average yesterday. I was talking about how the momentum is all dying out of the 10, probably heading for the 21. 21 is at a plus 0.43 here. And that is decent support right here. So that will be something we'll be watching for at the 80.35. Could get us down even into the 79 level or $80 level is probably going to be a pretty good support. We definitely are seeing some rotation here on this market, meaning that we're seeing some selling come in. PPMs are all starting to lose their momentum very, very quickly. So what should happen, we get down to 21, we should stabilize around maybe around 80 and a half, something like that, and see a high level consolidation start. And this is the daily. So if we go to the weekly, you'll see this picture that I'm looking at. So we're right here on a weekly basis. Bring this on screen for you. On a weekly basis, the STX number 79.81, 80.74. So far we've been 81.16. So this is the range. S3 STX would be the extreme for this week. But we look at the PPMs, and their PPM 1 is accelerating. PPM 2 is flattening out, but it's got quite a bit of upward momentum, and so does PPM 3. So that angle of attack is going to be key, and we're jumping about $2 per day on this 10-week moving average. That should hold. Like I said, extreme is probably going to be 79 on this thing before we see some stabilization and start to get up. Now we came just short of the handle I was looking for. 88.49 was the next projection. We got up to so far 85.41. And so that's been the high on this pattern so far. So look for some consolidation here. Next market, I've got a weekly market. We'll stick with just weekly on the gold tonight. And gold is looking at trading just above these numbers here at 17.95. We're trading 97 right now. This is the resistance, but the PPMs, like I've been saying for a while on a weekly, we need to get a close over 1800. We printed up to 1811 so far. This is weekly. Let me go to the daily just for a second here. Yeah, so the high there at 09, we keep printing right in these averages. 200-day moving average is at 1798. So 1800 is our pivot. Still need that close, but I like the overall formation as far as the PPMs are looking here on PPM 2 is accelerating nicely. We're still not in trend level, but we're close. So hang in there with this. I think if I put a model on, I believe on this big reversal day, we actually got issued for a buy signal here on, I believe it came in on GLD and gold as well here. All right, final market we'll go through is Bitcoin. And this is interesting. Last night I talked about us trading down into the 58 handle. This is the daily chart on Bitcoin. We're seeing a pretty good acceleration on the downside here and going to challenge some of these key support levels. PPM 1 is a minus 0.42 now. That tells you the resistance overhead at 62,160. PPM 2 is actually still up 0.91, so we should see it hold right in here. 58,741 so far, low 58,105. So we traded just below that number, trading pretty much right at it at the moment. We should see it stabilize between 58.62. That cycle that I brought up last night now is becoming a little bit concerning, and I'm going to try to zoom in on some of this stuff here real quick so you can see these numbers a little better. So you'll see a couple things here on the chart where I'm putting the cursor. There was a cycle signal. We'll also have something else going on here. There's some downward projections that are coming into play. And that projection is 58,109. We've had a low of 58,105, so right smack on the money on that. And if the 21 doesn't hold, then the next level down is 54,7, 52,631. So we should see some potential downside here, but the weekly charts, which I'm going to go back to, we're looking at, and we're also for today, we're trading almost at the extreme. STX 58,110, the low so far has been 58,105. So basically it's hit the STX number so far. Back to the weekly, and then we'll finish up here. We look at the weekly numbers. So I was talking about 57 S2, 57 759, S3 55, 428, and that magic number I left in yellow is at 60,612. So as we come in, that won't close until Friday night. We've had two closes on a weekly basis above that number. If we get a close below that, that's probably going to set up some potential more downside and maybe hitting as low as the 52 handle. But we're probably looking at 52, 62 on the range as we go forward. Well, folks, this is going to do the end of the show, and we've got one more show coming tomorrow night. Appreciate everybody showing up as always, and I will do my best maybe at the end of maybe tomorrow night in the show we can talk, maybe even cover the crazy situation that's going on in Tesla. I'll do a couple stocks tomorrow night to complete the week. So thanks for watching. I'll talk to you tomorrow night.